Hi all, my name's Sean Bassett and I'm a senior consultant here at MMA New England. And today we're going to go through an innovation boot camp specifically on employee benefits. And here at Marsh McLennan Agency, our job is really to help employers and companies on any of their benefit needs and their employee benefit needs, and specifically in how to attract and to retain top level talent. So we have agenda today. And we're really going to focus on three things. One is an employee benefits 101, really high level of looking what type of benefits you can offer to your employees. Number two is a three-phase approach at the best way of getting those benefits to your employees. And then finally, some methods to help attract and retain top-level talent. So Employee Benefits 101, when we're talking employee benefits, it's important to realize benefits are a critical piece of the offering that you have for your employees. It's not just compensation, but there are other spokes in the wheel. Along with that, they're not just one more thing to check off the list, especially in life science and in the biotech industry, where your benefits are a really key part of what you're offering. So companies are sweetening their employee benefits and perks in order to compete for and to retain talent. So where your benefits, they might be above bar in certain industries, those same benefits might not fall in that category when we're talking life science and biotech. And we have some key stats here that I really think drive that home. Specifically, 68% of employees say that work perks are just as important as health coverage and other traditional benefits. So a good barometer of realizing that it's not just medical benefits that is the key driver to success with these employers, it's other benefits as well. And also, financial stress is lower in employees who have health insurance through their employer. So it's not just about offering great benefits, but it's with the realization that if your employees have great health insurance through you as a company, their financial stress goes down and therefore their productivity goes up. And then finally, 56% of lower attrition rate in companies rated highly on compensation and benefits, and meaning your attrition rate and your turnover is going to be lower if you have a really, really solid benefits and a benefit core package that have a multitude of benefits, not just medical. So we want to look at a three-phase approach when discussing how to get benefits over to your employees. And it's important phase one is to understand. Secondly, it's to plan and build those benefits. And then finally, it's to communicate those benefits to your employees. So when we talk about understanding benefits, it's important to realize that we're not just talking about medical insurance. We're talking to different benefits as well. There are the core benefits for dental, vision, life, and disability, but we also want to talk about additional benefits as well, whether it's accident insurance, 401k matching, paid time off benefits, maternity and parental leave benefits, EAP services, educational assistance programs, and additional perks. And when we are talking about medical benefits, it's important to realize that there are different ways that employers can get benefits, whether it's through the standard group insurance. So that would mean just one employer on their own getting coverage through one of the big insurance companies, whether that's Blue Cross, Aetna, United, Cigna, and get those benefits on their own for their own population. Secondly, there are PEO options, which are professional employer organizations. And with a PEO, an employer might actually merge their risk with other employers to get better pricing and potentially lower rates. Some additional benefits to a PEO are also that some of the HR administration might also get outsourced to a PEO firm as well. And then finally, there's ICHRA, which this is a new benefit that came during the Trump presidency, which stands for Individual Coverage HRAs. And what ICHRAs are is that they allow employers to give a certain amount of dollars and funds to employees that they can use to help manage their insurance. However, it is not insurance on their own. it is a way for members to potentially buy insurance. So along with understanding what employee benefits are, it's important to look what they can do and what you need to know in order to get the ball rolling. So first thing is, it's to understand full-time employees and the demographics that play a key role. So for example, the rates and the financials that you might get for a group, an organization that is a little bit older, might look a little bit different than a younger group from a demographics perspective. Then it's important to do an in-depth analysis of your business with your broker in order to truly understand your risks, cultures, and objectives. And it's important to realize that one company might have different risks and objectives than other companies, even in the same industry. And after that, it's important to realize what the competitive plan features are and what the off-the-shelf medical plans look like. So as you grow and become a bigger company, you might not have that many options from a medical perspective, but you will as time and time goes on as your employer gets bigger. And it's important to have an objective. Here we have one sample objective showing, to establish and maintain a competitive employee benefits program based on employees' needs for overall well-being, protection against their own or family illness, and continuing education and maintaining financial health. So really broadening and encompassing not just one or two pieces of employee benefits, but really just finding a way that encompasses the whole thing together. Phase two is to plan and build. So once you understand what types of benefits that you want to offer to your employees and what the cost potentially is going to look like, it's important to start building from there. So what are the administration costs for the benefits? Will employees have to contribute, and how much? Most employers do have employees contribute a certain amount, especially in the medical coverage. So per benchmark, that can range anywhere from 75 to 80%. But certainly, especially in biotech and life science groups, that can change a little bit. For example, you might decide that you want to cover 100% of the cost of benefits. Also, are there additional resources to administer in-house, or will there be a third-party administrator for certain plans? So we talked about a little bit how a PEO can help in those ways. And then finally, and this is really key and important, can you survey employees to get their feedback on potential plan offerings? It's important to realize when we look at that list of what benefits can look like, that maybe there are benefits that make a lot of sense for your employees, and then other benefits that might not have needs for specifically your employee subset. And phase three is to communicate. The communication strategy is a critical component to the benefits planning and management. Understanding employees' benefits is critical to employee participation. So realizing how and why you need to reach your employees is critical, especially during times of COVID. Outside of standard compliance communication, there should be materials created to help employees fully understand their options, awareness of the financial benefits participating in the employer-sponsored programs, and engaging content to encourage the wise use of benefits. And the final item that we're going to talk about today is how to attract and to retain talent. There are plenty of different perk benefits that you can offer to your employees that make your total benefits package very, very attractive. For example, financial and educational support. One of the big drivers that we see there is regarding tuition reimbursement. It might make sense, especially for a younger population, that you as an employer offer tuition reimbursement to your employees, paying a set amount each month to student loans. There are other ways to offer financial assistance as well, whether that's through paid relocation. You can offer company discounts and provide financial planning and savings or educational programs. And then finally, there's always to provide an anniversary bonus. So once they hit a year or 2 years, a certain dollar amount once they hit those thresholds. Additional benefits include either flexible spending or health saving accounts, which can help from a tax advantage perspective to your employee population. With an FSA, employees can set aside a certain amount of dollars each year on a tax-free basis to pay for medical expenses. However, very few of those funds actually roll over. With an HSA, they can set up a health savings account, which is their actual own money, and that way they can use tax-free money on an annual basis for medical expenses, but those funds do roll over from year over year. Additional benefits that can help differentiate are both parental and paid time off. Although the Family Medical Leave Act provides certain employees with up to 12 weeks of unpaid job protection, it doesn't provide paid leave. And we are seeing that more and more common for not just for maternity, but for parental leave, offering a set of weeks at 100% or 60% pay. And then finally, discussing what your paid time benefit is going to look like. How much PTO are you going to offer your employees in a set year? Are you going to offer up to 3 weeks? Are you going to offer unlimited PTO? These are the types of benefits that we can help when discussing the full suite of service. Finally, with hiring, what you should consider. Number one, what is your talent acquisition strategy? And are benefits going to be a key driver there? Are you going to use benefits in a way to help attract and retain employees? Understanding milestones is also critical. Creating workforce plans and understanding milestones in order to hire in advance of those triggers. Number three is planning for the future. Set a plan for the next 2 years and determine what kind of partners you need to execute on the plan, or if you need to hire internally. And then finally, online branding. It's important to use different social media, such as LinkedIn, or even different Instagram or Facebook, to help really get your brand across and your name out there. If there are any questions, feel free to visit www.edge/benefits.org to request a quote, and feel free to email benefits@massbio.org. You can certainly reach out to me individually. Again, my name is Sean Bassett, and I'm at sean.bassett@Marsh MMA, or Pete Pedro, the Executive Vice President here. And with that, I'm going to leave it over to Matt Musa over at the Hartford.
Thanks, Sean. I appreciate that. Hi, everybody. My name is Matt Musa. I'm from the Hartford Insurance Company. I am the Regional Director of Technology and Life Science Underwriting for Small Commercial. And I just want to take a little bit to talk about what are some of the insurance considerations in terms of small business commercial insurance for a startup company, or obviously somebody just starting off and curious about what are some of the needs they might have or encounter along the way. So, small business insurance. What are some of the types of insurance a small business owner might need, right? And a small business owner is really somebody who's going to look in the mirror and ask themselves, do I need business insurance? If you're asking that question, it's really a good indication that you probably do and you have exposures that merit coverage to protect you, as it differs widely and broadly from personal lines coverage. So every business owner, you're going to need some level of protection, obviously for your business, your intellectual property, and the work that you're doing, obviously through research and development, if we're talking about the life sciences space here, but also to meet the mandatory minimum requirements of things like lease agreements, if you're going to have a shared working space or a lab you have. So it kind of needs to suit both needs. So let's talk about some of the basics in terms of commercial insurance. So general liability coverage, right? Think about protecting yourself from everything should somebody slip on your premises, to different lawsuits that come to your business, and the ability for you to protect yourself. That's one of the basic tenets of commercial insurance, and is often packaged with premises liability, right? Protecting should somebody come and hurt themselves, and is usually a mandatory minimum requirement for a lease agreement, right? Where you would work if you have a rented or shared space. Property coverage, this could be, typical things come to mind, all the way from your laptop to the materials you use to display and work with things, to testing materials and supplies. But it can also get as complex as data or things that you wouldn't normally consider something as physical property. So a little bit nuanced there, but definitely something that becomes critical, especially as you grow and expand. Workers' compensation coverage, most people are going to think, hey, I don't have a big staff of people. That's not really going to be a requirement. A lot happens and comes along with workers' compensation, including employer's liability. Who knows, if you've got a 1099 that you shop out a portion of your research and development work to, they might constitute an employee-employer relationship, and you may have crossed the boundaries now into meeting insurance requirements outlined by a given state. So while it may not always fit the case for a small business owner or startup, it's just as critical. And lastly, commercial auto coverage. So whether you have a fleet of vehicles or you just have a single Tesla you're using to get you around town, often it can be critical to have that covered, and there are benefits to insuring it under your company name. And if you don't have a company vehicle, no problem. Many lease agreements and other insurance requirements often have an auto liability limit of $1 million, which can be satisfied via a hired non-owned endorsement, which is fairly typical for base insurance coverage. So why these coverages? A great example, the average customer injury or property damage claim, $30,000. So that's where you get into the world of a BOP or business owner's policy. It's just merely a means to bundle some of these coverages together to meet your insurance requirements, but also to check some boxes on some useful coverages, especially for a company like a research and development lab. So this is a kind of a policy that has coverages that include liability-specific ones, like we talked about earlier, premises liability to protect your actual area you work in, should somebody slip and fall, down to general liability, coverage that's going to protect you should somebody press suit against you. These are highly customizable, and these are not large, complex policies. They are designed to be agile and small to fit the needs without being too expensive. So there are dozens of potential coverages out there in the insurance world that can help secure your small business, but there has to be a marriage between the essentials and the kind of things specific to your industry and the work you're doing to make it the right example for you. So whether it's meeting and securing those base lease agreements or requirements so you can actually get into your lease, ensuring your equipment and materials that are specific to your field, right? Or protecting your startup from lawsuits, all the fundamentals and the risk management process to protect you are available out there in the insurance market. So let's talk a little bit more about broadly. We talked a little bit about each one of these. I just want to go into a little bit more detail on what to expect out of each one. So we have a BOP product. It's called Spectrum at the Hartford. Though whether or not you go through the Hartford or any other carrier, just consider that this is typically going to include business property, general liability. We talked about those in the last page, and then business income, right? And I will say for the R&D field and the life science field in general, business income is critical. Keep in mind that business income and how it's considered, or should something stop my business from being able to turn a profit, that's where business income comes in. Business income looks much different in the R&D world, in the life science world in general. Just make sure whoever is supplying your insurance is going to be somebody who is considering those unique portions of business income insurance, so you are protected should something stop your ability to continue doing research or whatever your startup is working on. Some of the additional coverage options here, cyber liability, we call it data breach as a proprietary name, but obviously everybody's seen the news, read the kind of breaches going on countrywide. You'd be amazed to find out just how many of those are small businesses. And I can tell you that it is an emerging and growing threat in every industry, whether or not you are a life science or tech company, or even a large company like a Fortune 150. Either way, it's something you should at least consider minimum limits on to make sure that you're protecting yourself and any client data or third-party data you're currently responsible for. Employment practices liability helps protect you from anything from certain allegations against you and how you treat employees or wrongful termination suits. Again, in a complex world of having people that can come work for you on a 1099 basis all the way to a full-time W-2 employee, some things like employment practices liability go overlooked until it's too late, and you as a company, no matter what your size, are on the hook for covering that gap. And the last thing I would say is, we have a seamless solution for small commercial here, though, regardless of what your exposure is, most carriers are able to find a solution either through their own policies or shopping through others via a broker like MMA. So workers' compensation, I won't go too deep here. Just know, like I said, there may be certain situations that constitute an employee-employer relationship that you should be reviewing with a risk manager and a risk advisor like MMA. Should that become a need, you can always, they can work with us to secure that coverage for you. And then business auto, like I said, even if you just have a Tesla in your company name, we can take care of that. But also keep in mind, if your partner is running out to get more testing supplies during the day because you guys are running low, if something were to happen to them in a vehicle accident, having a simple endorsement like hired or non-owned coverage is going to allow in excess of $1 million on your business owner's policy to respond and help protect them because they were working for the business. So it's just something to consider with your risk advisor, your agent, as you walk through the coverages and the exposures you have as a research and development lab or startup. And then the last thing I will say is umbrellas, their excess liability. If you look at the 4 categories above, they're essentially something that are going to write limits over above that. So if you have a significant exposure, or for instance, some lease agreements require an underlying limit of liability at X, and they also require a certain amount at Y, sometimes it's simply easier to achieve that limit total with an underlying and an umbrella. Needless to say, all of these coverages here can be found on a simple policy combined like a BOP or workers' compensation or auto, but they all can be found separately or together. All right, so let's zoom in a little bit and talk more about particular coverages and key coverages as they apply to the life science field. So the last page we talked about are the fundamentals. Nearly every small business in the country need and benefit from some of those coverages, but let's stick with the life science industry. So if you take a look at a normal business owner's policy, normal property coverage, some of the things on there simply aren't going to afford the coverage that would be really useful to a life science startup or customer. Some of the things are spoilage with limits up to $500,000, and that includes things like medical supplies, vaccines, etc., that you had in deep cold storage. Biological research materials. This is a big one. We've seen a lot of times in loss history where biological research materials, which are expensive in of themselves, as many raw resources are, go bad and may not necessarily be covered unless your risk advisor like MMA or carrier are aware of them and are able to get those covered for you. FDA recertification, increased period of restoration. That's really, we talked about business income earlier, right? What happens should something happen to your business and there's a period of time in which it's more complex for you to get back up and running. It's a coverage that can help you there. And then lastly, biological hazardous waste and radioactive contamination and cleanup. So definitely a scarier sounding coverage, probably not something you're all going to have as an exposure every day, but hazardous waste cleanup does happen. Accidents happen, and it's important to make sure that you have somebody that can help back you and cover you in that, as the expenses that go alongside with cleaning up something like hazardous waste or radioactive contamination, as you can imagine, are expensive. And the last section here, I think, is probably something that a lot of people are going to be able to recognize as key. Animal eggs, embryos, cells coverage. Whether you're working in the biologics or biopharmaceutical sectors, research and development is going to have a lot of these raw resources and research materials that are absolutely key to be covered. They're not often included standard, but just make sure whoever your risk manager is, whether you're working with a broker or whatever carrier you end up using as an insurance solution, that some of these things are being included in there so you can not only meet your minimum requirements, but also that your actual research and development work is successfully met. business income for research and development, and business income for milestones. So we talked a little bit about this earlier. These are two key sectors that I would say they are almost exclusive to the life science industry. This is an area where not every research and development lab is the same as a small business in America, because you're not necessarily turning a profit day one. So if for some reason, God forbid, something happened and you weren't able to continue working for a period of time due to a covered loss, how would you stay afloat, right? Even with early series funding, it can be difficult to justify the expenses of you not being up and working because you don't have revenue to show. So this is an area where the policy construction changes, and it's able to use things like payroll and the series funding you have in order to sustain your business over that course and period of time, and it's able to get you back on your feet and back underway a lot faster. So again, without going into too much detail, it's a specific enhancement to business income that's almost exclusive to the life science space, and I would really recommend considering that whenever working with an agent or a risk advisor for insurance. So one of the last things I would say is a real big benefit that I like to think helps set us apart from some of our competitors. We have something called the Hartford Cyber Center. I know we touched on cyber a little bit earlier. There is a lot more to this than just cyber, as in a breach of data or a ransomware attack or something like that. This is something that we offer to anybody who has any coverage with us. If you insure a single truck with us in our business center, you're going to have access to this. It is basically an entire litany of resources, from data privacy and cybersecurity, attorney consultations through your contracts, best practice guides, third-party vendor contract review. So if you're going to sign with somebody, they can help review that process. But more than that, it's a way to be proactive and help secure yourself, since much of the work you're working on is often recorded in raw data form, and it is ultimately your intellectual property, and that is key to protect. So something to consider. And I would say, again, this is something we offer to anybody with any line of business or coverage with the company. So something we believe is that bullish on. All right. The last thing I will say and touch on is products. So we talked, most of our life science industry book is a lot of startups, research and development. But the big thing for us is we want to be there as you transition and grow. Obviously, some of the ideas you all are working on will expand, and they will become products. They will have a true need to protect the actual intellectual property, whatever that kind is, especially when they go and they are regulated by the FDA. When you hit that milestone, most risk managers and partners like MMA will likely advise you it's time to consider things like products liability. It's also a milestone when you consider things like certain forms of clinical trials. It doesn't always have to be humans either. So clinical trial coverage, products coverage, I won't go down the rabbit hole of all the complexities within it. I will just say, when you hit a milestone like that and your risk advisor recommends it, there are carriers like the Hartford that can be with you from the infancy in the R&D phase all the way up through it's time for you to have an FDA regulated product. So that's my time, and I hope it was helpful at all in indicating some of the early necessities as a startup company, all the way to what's happening as I expand into a true product space and leave the research and development phase. Thank you, everybody, for your time. I hope that was informative, and join us in the next session for Q&A with MMA and the Hartford.